your main data points you want to gather for when dealing with financials is, of course, your date as your first and primary for where you want to be able to stack up and align all the other data based on each day and have for usually your timeline basis for things. Then your price to earning ratio to show a formula, just to pretty much make sure to show how much your stock price by earnings per share roughly would be. The volume itself is how much of the stock is actually out in circulation, and then either your opening or closing price, so you can either put at what it opens at per day or closes at, usually using the closing because what is in the end of the day is what usually is used. And here's an example of some data from EA's current as of when I got the data. When performing correlation analysis, there's a few indicators that I needed to look and to show off how the stock price was being affected. The main indicators for the analysis were volume, opening price, and or closing price, and then just to add in show difference of how much the highs and the lows might affect what's going in with the price for the correlation effect. And based on what I found, the highs and lows were trying to show that they were heavily affected, which would make sense since dealing with where the stock price is going up or down. The volume actually had not much to do with the actual closing, which was based on it, so it was more towards the what was being affected during the day, which was the high and the low. When dealing with looking for whale tracks, the evidence being shown for dealing with the EA's projections was a bit odd and hard to really completely nail down as shown, but the volume would shift up and down along with the opening prices. What was used for here is dictating that just because as the quarters the volume was going up or down, it was being adjusted to maintain that the pricing for the shares would be adjusted, showing that there was a large, at least quantity of people, if not a whale, being used to continuously at least maintain the pricing of each of the shares, but also a high level showing off that when every time that the volume would go up or down, it's how the pricing would be affected so that it would ultimately keep in track for what their values would be. The support resistance goes up apparently when and shown by every time the volume would go too high, the pricing was not so much at its highest point. It would always consistently be high volume, usually was less price, as indicated where it's showing where there's massive amounts of trade and differences really being affected when the volume was low more so than when the volume was high. Using the Bollinger Band method to identify the trends with the upper and lower band and the simple moving average as shown here, it gave a good representation of the shift, or how big of a shift there could have been between each day. And based on this graph shown, the main thing to look at is whether it's be good to buy, sell, or hold on to the EA stock as of right now, where it's ending at the end. And just based on the trajectory that's shown in the previous, if you just identify this would be a year and a relapsing similar thing, it would not be a bad idea to buy, as it's not gotten completely to its spiking portion yet, which would be at the next quarter coming up, leading into the winter quarter when a lot of the releases would be. So identifying as that at the current time period, buying is still a positive gain for the future, whereas if you waited past to the quarter after the next, it would most likely drop. And these are things that not just from looking at the financial as being shown, but also from in general looking into a game developing based company where they have release portions and they have their biggest releases, which would be near the end of the year, and being able to identify that is the best time to then wait for essentially, if you were probably at the lowest point leading up to be able to invest early, you could, in this case, invest in May would have been the best time to, and then if you want to sell at its height right after the releases, which would be up into, as shown, the November to December time period for when all their releases are scheduled to be done, so that you could try to get your most gains, even though the highest variance is more towards the beginning of summer months. But to consistently have gains would be into the later quarters. The prediction going into the future for EA is a bit tricky for a few different reasons, but for the immediate future going into, like say, the last quarter, the winter quarter, as said before, is it's most likely to go up, and this is a continuous trend that has been happening, as it was shown before, throughout the years, where EA stock continuously has gone up and down depending on the quarter, depending on what's happening. And this has a few key factors as to why this is. The first one is, of course, it's game developer. It's how they work. EA, especially since they're heavily influenced by the business side as well, has their releases for their different their gaming titles to come out at certain key points. And those points are to also help with, if you're an investor, when's the best time to invest, or also when's the best time to see how your investment with EA is going, is if these certain key points of release times, if the stock does not go up as well, is a good indicator of how good or bad the company is doing with its releases. But also showing where the downtime is when, in a gaming community, they're putting more time into their development and less time is being able to be shown off on sales of other things, which being a bigger company, they also are able to sell more than just the titles, but the main thing is new releases, new titles, new things coming out, and they like to do it at key points in time. And then the next thing going in is, yes, we're in the near future. It's looking good because in the next few months, EA is going to have its releases for its winter quarter, or so around the time of Christmas and so forth. The big spending time period for games is looking good. So as of right now, they are looking good. But in the near future, a year, 2 years, 3 years is a little bit shaky, as the economic decline is been in its effect. It's coming, that's going to affect, and with being a gaming company, the main stuff that's affecting it is going to be expenditures on things of the nature of not necessities. And so how would that affect them? Possibly negative, but I'm not seeing them dropping too far, but it's still not the best company probably to invest in if you're looking at your highest yield. Thanks for watching.